Hi guys, Piotr here. This is LiteFinance Global YouTube channel, and again we are going to discuss very interesting things. Today, moving average, convergence, divergence. In other words, we are going to discuss MACD oscillator, which is one of the most popular technical indicator. The very important thing here, I have to say it clearly. I don't think that the base on the MACD solely is possible to trade profitable long term without any additional resources and tools. What we are going to discuss today, the basic stuff, but also I'm going to show you the twist as usual, because overall things related to the MACD, the basic stuff, is available almost everywhere. That's why I decided to tell you about the twist. Again, as usual, do your own homework, do your own research as well, right? So there are, when it comes to the basic stuff, so the MACD might be used based on the zero crosses, and when we are talking about the zero crosses, that's the midline over here. Let me make it a little bit bigger for you to see the things here, right? So that's the midline. So either we are talking about the lines crossing the zero, like here to the downside, like here to the downside, like here to the upside, here to the downside, or we are talking about the histogram crossing the zero line, like here, here, and here. But again, trying to trade based only on this, using each and every cross, might not be profitable. As I mentioned a little bit later, I'm going to tell you about the possible twist. So let's discuss what we have here when it comes to the MACD. All right, let's discuss what we have. So first thing first, as I mentioned at the very beginning, we are talking about the 0 point. So we have the line over here. The next thing is the moving average, in that case the red line, right? And then is the fast line over here, and of course the histogram. So basically zero cross signal. That's what we are going to check right here, right now, when it comes to the cross. First thing first, let's talk about the zero cross when it comes to the histogram. All right, so we have cross here, so let's place the line, and in that case, as you can see, there was a little bit of the few pips to make. Was it the great trade? I wouldn't say so. A little bit earlier we had also the cross line, all right, here, and in that case it was one candle earlier, it was over here. Okay, the next zero cross we've seen here, and followed by the cross on the line within the next candle or so. Okay, somewhere here. So that's the first strategy based on the zero line. All right, the second one, it could be pure crossovers. So let's clean the chart. Let's have a look what we have here. In that case, we are talking about the lines only. So let's have a look where we do have the crosses. For example, right over here, right? Downside move when it comes to the cross line. In that case, we also have histogram crossing the zero line, right? So we have two things signaling possible downside move, and in that case, yes, it really happened, but depends on where your stop was. That was the possible stop count as well, right? We started after the stop count, we started to move down. Another cross we've seen when it comes to the lines, we've seen over here, okay? And also before we saw the move to the downside, right? As you can see, for a few candles over here, right, we had the stop count to the upside, okay? So it was again, it was possible to be stopped out when the decision been made only purely on the cross, right? So that's the proof that trading blindly, following just the crosses, might not be profitable. That's how I see the things related to the crosses, right? The next is a thing related to the divergences, right? What does it mean? Well, when we have higher prices making the new high, but it has not been confirmed by the MACD, right? So let's try to check the chart. Let's have a look if we can find some divergences, right? So in that case, on the euro-dollar hourly chart, that's what we are talking about here. So here and here, there is a high, then there is a lower high when it comes to the MACD, all right, followed by the high and higher high on the euro dollar, all right. Another thing is here, low, low, lower low on the prices, but not lower low when it comes to the MACD. So that's the divergence. But let me show you that it's not always the case. If you are not trying to protect yourself based on the just pure belief that the divergence is going to work all the time, let's have a look if that's the case, right? What we have and where we might see some kind of the divergence, where there was, unfortunately, I can't see here, at least not now yet. Okay, here we go. So we have the high. Let me get back into that somewhere here. Yeah. So we have the high and the lower high when it comes to the MACD, right? We have the high and higher high on the prices, but to be honest with you, taking into the consideration what has happened next, right, without anything going on the MACD, this divergence been broken here. So what's the twist? You know, mostly I'm trading without the indicator, as you know, but I'm not saying that it's not possible to be profitable trader using the indicators, but if you have some kind of the twist, for example, right? So what I like to look for, what I would tell you, is to try to check the things related to the MACD and the possible stop hunt. What I'm talking about, if you want to use the divergence, right, for example, you may want to use immediately when you see the divergence and the possible stop hunt with the immediate reversal when it comes to the prices. So let's try to figure it out the things here, and I think we are going to be much more closer to the idea I'm talking about, right? So what we have, for example, here when it comes to the price, over here and over here, what we have when it comes to the MACD, here and here, right? So there was a clear divergence, and trading basically only on that, we would be probably stopped out. What I would look for, it would be the closing price, because we have, for example, swing high here. I would see after the higher high, what I would like to see, the close below the previous swing high, right? In that case, that would be somewhere here. So we've seen the price action to the upside, following by the sell off, right? Following by the sell off. So closing on that particular candle would allow me to try to trade short side, where I know where my stop is and I know what's going to be my target, right? The bottom of the pre-rally consolidation, all right? And in that case, without stopping me out, we've been hit. It was possible, as you can see here, it was possible to try to trade that again, basically taking into the consideration what is going on with MACD, right? That was the previous swing high. So in that case, I would look for a closing below that previous swing high, right? And immediately waiting with the working order to sell, I would be filled here or here. So the twist here is, right, to wait for some kind of the price action confirming the idea of the trade, all right? The next one could be the thing related to stop count here, right? After the rally over here, MACD rally, we've seen the pullback, some kind of the consolidation, attempt to rally, followed by the sell-off, and what immediately we got back above, right? And we've seen the MACD, for example, crossing the zero, or histogram holding above the zero line. That was supposed to be entry over here or over here. So I strongly encourage you to go through to check the different variation to try to work with the price action, watching what is going on the MACD. With that being said, guys, I wish you great trading experience with that. Hopefully you will find useful, especially the twist. But again, do your own homework, do your own research. Thank you very much, take care, goodbye, and see you around.